Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday, start of 2023, Happy New Year, and all that fun stuff, market webcast. Okay, daily chart, and you can see the red line. We continue to push up to the 50-day exponential. We did it back on December 22nd, December 21st, kind of rode this blue line, which is your 9-day. Now we're back up to the 50. So the larger takeaway is that some of these larger moving averages, green is the middle Bollinger Band of the 20, the yellow one there is the 100. You start getting into these larger moving averages, and the bulls consistently run out of steam since they, after breaking it back on the on the 15th here and turning it into resistance. We had that little lower band ride. They blew their chance at a secondary lower band right here, and we just kind of consolidated into the new year. So if the bulls are going to be successful this week, they need to do a couple of things. They need to hold weekly pivot as support. They need to take out these three moving averages sitting on top of them and go from there. What do the bears need to do? Get back on the underside of that weekly pivot. Hold the 9-day, break the low from Friday, and try to get back in towards 37.88.5 from back on December 22nd, and then progress the tape to the downside from there. Which, that's not a heavy lift if the bears can get some momentum going in their way, and they're going to have a couple of opportunities over the course of the week as far as economics goes. You got a global manufacturing PMI today. You've got Fed minutes 2 o'clock tomorrow. You got ISM tomorrow. You've got you got your standard claims and stuff. But then come Friday, we've got the jobs report. So there are enough catalysts along with the other typical catalysts here and there for either side to kind of take a little bit of an advantage. Historically, at least in my experience, January tends to be down. This week tends to still be pretty dead, kind of similar to the week between Christmas and New Year's. The week between Christmas and New Year's had its moments. It had volatility, then it would go to sleep, and you can't really expect any more than that. It certainly wasn't dead. As you hit January, it usually takes a little bit of time for things to gear up, and typically next week is when things really get moving. What we've seen though is January has been a tough month for the bulls. That has been the tendency. We'll see if that continues this month. So we've got a new weekly pivot, 38.57.57, which is a grand total of one handle below where the weekly pivot was last week. So welcome to the week between Christmas and New Year's, right? As far as shorter term stuff on the board, you got the hourly mid-band, 68 and change. Volume weighted average price is sitting around, right around 70, basically 78. Our proprietary moving average is at 87. We're trading now right around, 79, 75, 80. So 68 to 88 is that first little zone that they're going to have to deal with off of the open. If the bears can win that zone, they got to go to work on weekly pivot. Try to get down below the Globex low down at 42.75, and again, just not to be not to beat a dead horse, but if you're the bulls, until you deal with all this stuff, not just trade above it, close above it, turn it into support, and go up from there. The upside in this tape is going to continue to be restricted at best. All right. Everybody have a fantastic day. Be safe. Be healthy. Take care. Happy New Year. All the best. And I will catch you guys tomorrow. Have a good one.